But we'll move across and address yet another sector in the next aspect that we are addressing today. The acquisition seems to be the word for Quess Corp. And the company has recently acquired Monster's India, South Asia and Middle East business, and will be paying about $14 million for this. And Quess Corp also acquired the care business of HCL Services, which is a subsidiary of HCL Infosystems. Let's discuss these in details with the company's growth plans with the chairman and managing director, Mr. Ajit, who joins us on the phone line. Mr. Isaac, good morning and thanks for joining us. Let me just start off with Monster's acquisition. A lot of this has been discussed as to the reasons behind you're venturing into and this particular buy. But if you could give us more details about what Monsters can do eventually, say in the next 2 or 3 years for Quess Corp.
Sure. So we are very excited about this transaction where we've been able to acquire Monster's assets for India, Middle East and Southeast Asia. As you're aware, Quess started off by being in the employment business through our investment in IKEA Human Capital Solutions, the company that grew on to becoming a staffing major, India's largest staffing company today. We employ, all found in Quess today, about 250,000 people, out of which about 150 to 160 is in the staffing space. So clearly we've been familiar with the process of how you acquire a candidate, convert him into an employee, you payroll him through his entire life cycle and severe him. Monster gives us the opportunity to be able to acquire candidates through the platform that the Monster has and build out a workforce management platform progressively from that starting point. So we think that Monster gives us the ability to create such a platform from scratch. It's a great brand and it's got a fantastic geographical footprint from India, Middle East and Southeast Asia and represents a huge opportunity as Quess transforms itself from just being a staffing company providing managed services into becoming a complete employment solutions company.
Good morning, sir. I just wanted to understand what the EBITDA and PAT margin profiles are of both the acquired entities, this is the Monster business as well as HCL's care business, because I believe this is not something that you have shared so far.
Yeah, Monster is a company that does approximately about $26 million of sales, $27 million of sales, and it's a company that is just about breaking even. We think that some more investments are necessary for this year, so it's not all our investments are for the long term. We've never sold an investment in the past, so we think that it will require some more cash as we keep transforming it from where it is. But it represents a large opportunity for us in terms of building value for our shareholders. Just as a point on this, as you would have seen, we bought the company at about approximately half-time sales. In the stock markets, if you were to look at other internet properties of this type, they trade in multiples of revenues going up double digits. So the upside for us as we keep creating value in this company is tremendous. In the case of HCL Care, the company does approximately about 200 crores of sales, and it presently does about, let's say, about 5 or 6 crores of EBITDA. We think it has the potential to reach about 7 or 8% EBITDA margin and acquire at least about 20% sales growth every year on year. So that's the outlook for both these companies.
Right. Mr. Isaac, your third quarter has been extremely strong and, not unlike what we've seen in the first half of the financial year as well. My question then is that at least for the foreseeable future, and by that I mean at least the next 4 quarters or next financial year, can we expect this strength to continue? And if this strength does come, will it be largely organic or will you continue to get in more acquisitions on the back of which we can see, your growth in the top line as well as the bottom line?
That's a good question. I've always emphasized that the biggest value that is represented in Quess today is of the businesses that we already have. we've grown very strongly in this last financial year. Our revenue growth has been 48% over the previous year. EBITDA growth 52%, and PAT is at about 70 crores right now. So we are ahead of our targets in terms of organic growth. Compounded annual growth rate for the last 7 or 8 years is approximately 45%, out of which 33 has come through organic growth and maybe 12 through inorganic initiatives. So we're largely a company that's grown through organic growth and not as much through acquisitions, although they've helped us create new verticals when we wanted it. But I think the focus in our company is clearly on organic growth. So while you've seen us do multiple acquisitions, actually 22 of them over the last 10 years, what they've given us are stepping stones and springboards to new businesses rather than accounting for revenues all by themselves.
All right, sir. And, my final question will have to do with the fact that is it possible that your margins can dilute further on account of your inorganic policy, say in the next 2 or 3 quarters, or for that matter, the next 1 year?
No, actually, our margins have grown to 5.74% in the last, in fact, 14 basis points has increased in the last quarter alone. We think there's a further upside to our margins and further expansion to our margins. We are closer to 6% as we will exit this year's margins. That some of these businesses that are turnaround businesses are more or less break-even ones and don't contribute too much by revenues right now. It's not going to move the needle by too much in terms of the margin profile of the company, but they represent opportunity stacks for value increases for our stock in the future because they are growth businesses, they're turnaround businesses, and when they start contributing, there'll be huge upsides to that.
Right, Mr. Isaac, thank you very much for joining us here on Bloomberg. Quint, appreciate your time. So that was the management of Quess Corp saying that despite acquisitions, organic growth remains a key strategy for the company. But let's shift focus to the new kid on the block, which is construction company HG Infra Engineering, and it's 462 crore IPO, which is open for subscription. Somit Sarkar is standing by with a snapshot